At the peak, this North Scottsdale home was valued at over $1 million. Tomorrow, it's on the auction block after sitting on the market for months. The starting bid, $329,000.
S&P Case-Shiller Home Price Index showed a decrease of 18.7%. The co-creator of the index says this decline may continue for some time.
This time next year, I think housing will be on a positive trajectory, and of course, that's a big plus for the economy.
Mixed bag on the real estate front today, with housing starts falling to their lowest level since 2009 for December, while building permits.
Well, the areas that are going to be more depressed for longer would include the areas that have been hit hard with foreclosures, the obvious areas like Florida, Arizona, Nevada.
You have to look to really kind of read the tea leaves as to where the housing
Good
market is
afternoon,
headed.
Arizona. My name is Steve Rundle with AZ Real Estate Radio. In studio, Sean Ybarra. How you doing, Sean?
Doing good.
Good.
We got the studio figured out. I think
Now we got all the
back on
technical
track.
difficulties all settled for this morning.
Let's
As
just
always,
start short-circuiting here.
as always, our technical crew took care of it. How you doing?
Doing good.
Good.
Can't complain.
We're missing Andrew again this week.
Yes.
He's on vacation.
Administrative leave.
Right. It must be nice to be a lender these days. You know,
It must be. I mean, it must be really busy.
You can go out of town. You can, take vacations. It's nice. So, Sean, last week we were talking about a topic that came up at the end of one of our shows, and I wanted to bring it back up because I thought it was pretty important. And it was in dealing with short sales, and we do a lot of work in the short sale realm, but more so in regards to the credit aspect. You mentioned something to me that just really stood out, in that if you're in the process of doing a short sale and it goes 150 days late, it's really considered a foreclosure and could potentially be reported as a foreclosure on your credit report, even though you had a successful short sale.
Correct.
Even though the bank has said, hey, look, we're going to do this, we accept it, the price is fine, we're going to send it to the creditors, and what I always see is paid for less than agreed or some sort of terminology like that in those acceptance letters.
Which is legal tender. I mean, it is, you're doing what you're supposed to do.
Right.
And getting that the debt is no longer owed.
Right.
And that's the important part from the realtor standpoint. The other side of the question, and again, we talked about there's lots of moving parts in a short sale.
Right.
You have the one bank that's taking a loss, so to speak. You have the seller or the buyer, two different circles in there. And then you have all the credit realm and the after effects of the short sale and what happens to it.
Right.
Because that's the important part, and that's the part that most people are relieved and they're glad it's over.
Okay.
And they stop right there.
Right.
And unfortunately, that's where it all begins. Because now what's going to happen is that, guess what? As they're starting to move forward and they're getting into the better spot and all the stress is relieved from them, they don't own a property that's upside down anymore. But guess what? They can't buy anything either.
Right.
Because they have these negative marks on their reports. Now, the credit bureau, they see it as, did you pay your bills on time? It's a simple pass-fail type test.
Sure.
You either paid or you didn't.
Right.
And did you pay within the 30 days or did you not pay within the 30 days?
Right.
If you paid within 30 days, you're fine. There's no late payment that goes on there.
Okay.
If you didn't, and this is where we have a problem with loan modifications, short sales, those kind of things.
So you're saying it's not just a short sale issue. It's actually a modification
problem.
Deed in lieu, short sale. All those things are affecting
your credit report.
Your credit report on that.
Correct.
Okay.
Now, what happens is that they go through, and let's just take loan mod first.
Sure.
Loan mod, people are paying their agreed payment with the bank.
Right.
And it's $300 short.
Right. Well, it's $300 short because
the bank told them to pay $300 less.
So the bank said, hey, look, we're going to do a loan mod for you. I want you to start paying, $700 instead of $1,000. And you send that $700 in instead of the $1,000 every month.
Correct. Now, until the paperwork gets filed with the bank itself,
right,
and they make it to where that is the new payment,
right,
which there's certain paperwork and everything else that they've got to go through, they will then report that to the bureau,
right,
and the payment changes.
Okay.
Until that happens, you're going to have a slew of late payments.
because you're not making a full payment
that the bank is expecting.
The paperwork hasn't gone through the process.
Because the left hand doesn't necessarily know what the right hand is doing.
And therein lies another issue that we have with
another broken system.
Exactly. So you're saying even though the client, the customer is doing exactly what the bank has told them to do, they're now still acquiring 30, 60, 90 days, 120 days.
Well, what they're going to do is they're going to apply that $700 to the first payment.
Right.
Now, the next $700 payment the next month will finish paying the first payment.
Right.
And then they have a little pool there for the second.
Right.
The third, the fourth, and so on. You never really have enough monies in place, even though you're doing exactly what the bank told you to do.
And so you're constantly late.
Exactly.
You're just constantly late. There's no ifs, ands, or buts about it. You're
Correct.
just late. And that's how. Now, is it something that the credit bureaus are picking up on, or is it something that the bank is reporting?
If the bank is reporting.
So the bank is actually doing the reporting on.
Because the bank can't actually technically do a loan mod until you're so many days late.
Gotcha.
Because you have to show a hardship.
Right.
And the hardship is in turn is what gets your approval for that.
Okay.
So you can't do one without doing the other. So
Again,
I mean,
a broken system.
It's a broken system, and unfortunately, that's how the laws are there. There are more laws being put in place for consumers now, but that same problem still exists with the loan mods. So now let's switch gears and go to short sales. You did your job. You got your note. You got all the information. The bank released you from the liens.
Yep.
The first, the second, whoever else.
Hopefully there's not a third.
Whoever else you have on there as
Right.
well. And everybody says, okay, here we go. We're good.
Okay.
You think that you're done, the relief, the big, whew, I'm done.
The sigh of relief after.
I can go out and live life again. I'm not
Exactly.
house poor, and I can go do what I need to go do.
Right. And for someone who, let's say they have been on time with everything else in their life, you know, have made their payments, have made their credit card bills, have made their utilities, all that other good stuff, car payments, etc. This is the only derogatory remark that they potentially could have, because short sales do affect the credit report.
Correct.
We know that, and we tell our clients that. But this is something completely different.
Yeah, this is where the devastating blow is about to hit.
This is what blew my mind, because, you know, I really wasn't aware of it. I know there was a derogatory remark, but I didn't know how severe it actually potentially could be.
It basically comes into whatever the amount of upside down portion that you received in the 1099
Yep.
is now a collection on your credit report.
Wow.
So let's say you're 200,000 upside down, you sell for 150 less.
Right.
Now you have a collection on your credit report for $150,000.
That is what the bank is reporting.
That's what the bank is reporting to the credit bureau, and that's what the credit bureau is seeing.
Okay.
Now, there's multiple different scenarios on what's happening here.
Right.
And
I'm
depending
sure.
on what your letter states that you got back,
Mm-hmm.
and this is why we teach realtors to always put in there that you're going to show it as a...
You can't teach realtors.
I know, but I try.
Yeah,
It's always an
impossible to
education
train.
thing.
Right.
It's like herding cats.
Right.
They're just
It's
everywhere.
impossible to do.
But we're trying to get them to where they will say, and in the verbiage that the bank letter that they receive back,
Right.
that they will resolve the credit issues as well.
Okay.
And then at that point in time, there's multiple laws that we can go back through at Praxis Credit Consulting. We can go back through and generate results that way.
Right.
That will help them do that. The problem that we find is that the realtors don't always do that. They leave it open-ended, and now somebody's $150,000 collection notice.
Right.
Eventually, they're either going to have to pay to get it off, or they're going to have to do other ways of doing it, waiting a certain amount of time period, getting certain lending restrictions on that to where they can get into the new house as well.
Well, and one thing that you mentioned last week is after 150 days, some credit bureaus report it as a foreclosure. Is that correct?
Well, that's not necessarily the credit bureau's reporting as foreclosure.
Okay.
That's how a lender sees it.
That's how a lender sees it.
That's how a lender sees it.
So once it reaches that 150-day mark, and you're actively working with the bank, working with an offer, submitted all the paperwork, you're on your way to successful short sale. But it's taking so much time. And, I have short sales that last, quite some time all the time. I mean, you figure you market the property. Maybe it takes 30 days to get an offer. Then once you get the offer in, the bank isn't going to look at it until all the paperwork's submitted. And that probably takes a week. And then they review and look at it and make sure everything's there. And if not everything's there, they say, hey, we need this or updates. So it takes some time at the bank level to go through and get someone who can make a decision.
Right.
And that could take a month or 2 months. I've seen it take 90 days, which is a ridiculous
We've seen it
amount
up to
of time.
6 months.
Well, and that's just one portion. But then the person who has to make the decision, they're going to take their time and go through the process. And they could take a month or, however long that they say. They usually say anywhere between 2 and 4 weeks.
2 and 4, is that 2 and 4 business weeks?
2 to 4 business weeks. You caught me on that one.
What exactly is a business week?
Right. Every day. But, so that can take some time. And then once that takes time, now the buyer has to get their financing in place. And that's going to take another 30 days. And that's to assume that there's only one lender on the property. But most and a large portion of the loans that were made
Those 80-15s, 80-20s.
80-10-10s, option arms with an extra. I mean, there were a lot of, loans that were first and seconds, true first and seconds, that weren't cash outs. But, now we're dealing with 2 banks instead of 1, and their processes are completely different than the other. And so...
And that's where you start coming in with the deficiency laws, and that's where we're still arguing in court right now, not we, but as far as a community, on is that first and second, is it all purchase money?
Right.
Or is there a deficiency based off of the HELOC that was purchased with it?
Absolutely. I think the gray area there, and I think the gray area has been successful in showing that if this was both a first and second, and it was, you can show and document, hey, look, these were taken out at the same time, they were used for this purpose, that the gray area is leaning towards the homeowner and not having to worry about that deficiency.
Right. I think you're right on that. We still don't have any successful cases on that, but as far as that goes, it is where we're at.
Well, listen, we're going to bring back this topic in a few minutes. We're going to take a break. Give us a call, 602-999-1912. As always, ask any questions you want or visit us out on the web at www.azrealestateradio.com, and we'll be back in a few.